Bless Squad, what's going on with y'all, man? It's your boy, Blessed Applesauce, here to bless y'all with another video. And today, this video is going to be the number one video you need if you're thinking about investing or you want to get started in investing. A lot of people come to me asking, like, where do I get started? What do I do? Is this the right terminology I should learn? Should I invest in a 401k, IRA, just throwing different terms, trying to figure out like where to get started. So I decided to record this video to break down 10 things that a beginner investor needs to know or just have set aside on their mind to realize how to get started investing. This doesn't matter if you are a real estate investor, a stock investor, a crypto investor, a Forex investor, or you're trying to open up your own business. These are 10 concepts that you need to know before getting into investing. So before we get into the video, make sure you spam the like button, and also sub down below for more content like this. Even if you've been investing for a couple of years, I think these concepts here, these 10 tips, will definitely help you continue on your investing journey. And for the beginners out there, it's definitely going to exponentially grow your accounts or your portfolio, however, whatever direction you want to go in. So stay tuned throughout this video and let's get into it. The first thing that you should know is don't buy what you don't understand. And for the beginners out there, they're probably thinking, well, I don't really understand anything. And that's where the education comes into play. If you don't know what you're buying, you don't understand what you're buying, you're going to lead yourself to be up for a lot of risk. In this game of investing, there's going to be a lot of risk that's taking place. Whether you buy stock, whether you buy real estate, whether you buy crypto, whatever you're buying, there's going to be some type of risk associated with it. But the risk exponentially lowers if you learn exactly what it is, how it's doing. For example, if you take a stock, if you take Apple, if you're familiar with the CEO, Tim Cook, how he's running the business, if you're familiar with how the iPhones are selling, if you're familiar with how much cash they have on the side, if you're familiar with what they're projected to do in the next 5-10 years, you've seen a couple of the videos of the CEO explaining what they're planning to do with the iPhone 15 and onward and all that good stuff. Once you understand what you are investing in, the risk is going to be diminished. For example, I'm in Caterpillar right now. A couple of conversations have come out with the Caterpillar CEO explaining what he wants to do, where he wants to take the company, how much cash they have on hand. And right now, even though the company is down, I think it's trading around $170 per share currently. Even though it's down, I feel comfortable knowing, even if I get into this company right now, even though I'm taking this risk, I understand what the company is doing, where they're projected to go, where they plan to grow this business in the next 5 to 10 years. So I feel more comfortable taking that risk with buying that trade and getting in. So as a beginner, make sure you understand what you're buying and have a basic understanding of what's going on before you drop any money into it. Next thing that beginners need to know is don't risk any money that you can't afford to lose. In this game, you're going to lose money. That's just the name of the game. It's investing. You're going to lose a little, but you're going to gain a little. And over time, if you do it correctly, you're going to gain a lot. But don't set yourself up where you're risking more than you can afford, or you're playing with money that you know you need for rent, for bills, and all that good stuff. And this is where saving is going to come into play. If you haven't seen my saving video, how to save money on a low budget, make sure you go check that out. It's going to show you how to break down your bills and budget a lot better so you can play in this investing game. But once you have money set aside, that's when you can start to play this game. You can put $50 aside, $100 aside, $200,000, whatever you feel comfortable with losing on the regular basis. Of course, if you do this correctly, you should not be losing all your money. That's when a couple of things I'm going to talk about in this list come into play. But you want to make sure that you are risking money you can afford to lose, because anything can happen in this game. So be wise and be comfortable with the possibility that you may lose, and just take the detachment out of the money. Just put it in. Don't even worry about it. Set it and forget it. Leave it alone. Don't touch it. Don't look at it. Don't add the app to your phone where you can constantly double check it. Don't worry about any of that. Set it, forget it, invest. That's how you're going to get it done. Next thing on this list that is going to help so you don't lose a whole bunch of money is the diversification. And diversification is one of these fancy words that means put money in different places. A lot of times they talk about that in stocks, but usually when they're talking about it in stocks, they're talking about putting it in different type of stocks. So if you put a little bit in Apple, a little bit in Microsoft, a little bit in Google, you are diversified across different companies, which is true. You are going to be diversified across different companies. So let's say Apple is doing well, the iPhone is taking off, everything looks great in the iPhone, you're going to be doing well in Apple. In Microsoft, the new Windows isn't doing too hot, so you're not going to be doing well in that. So it kind of balances each other out. But diversification is a lot deeper than that. And a lot of books and investment advisors are not going to explain this to you. Diversify across assets. And diversifying across assets means not only would you want to invest in stocks, but invest a little bit in real estate, invest a little bit in some gold and silver, invest in a little bit in some physical products, invest into some small businesses. So you're not just relying on just stocks. I know a lot of people focus on stocks is the way to do it, stocks is the way to get rich, et cetera, et cetera. Yes, it is a great vehicle to get rich. A lot of people use it. It's great to have, but also diversify across different assets. Buy some real estate, buy some businesses, start something on the side that you can do, where you can maybe you're loaning money out, maybe a couple $1,000s out to some small businesses or something like that. Whatever you can think of, don't just focus on strictly stocks, because that's really not diversification. Because a lot of times the stock market can crash. We have market crashes where it'll drop 40, 50%, as you saw in 2008 and we saw in 2020. I think 2020 it dropped maybe like 30% or so. But these situations can happen where the stock market is looking terrible, but in reverse, maybe the real estate market looks great. Maybe you have another side business that looks amazing right now and is doing well in these type of situations. So you want to diversify across assets, hedge your bets. And there is ways to hedge your bets in stocks, but a lot of times you're gonna have to do that individually. So if you have one account that has a stock portfolio that stuff goes up, maybe you have an inverse stock portfolio that does the inverse. So figure that out, diversify across assets. Don't just focus on one thing. That's going to be very, very important. Next, you're going to hear this a lot of times in your investing career is beating the market. You're probably wondering, what does beating the market mean? This is going to be very important for any investment you make going forward. Learning what beating the market is, and is it good enough to beat the market? And what is the market? When they're talking about the market, they're talking about the S&P 500. The S&P 500 is a combination, a basket of the top 500 companies in the stock market. So you have Apple, Amazon, Google, Tesla, Walmart, all those top 500 companies. They have a average that they make every year. And on average, they make about 7 to 10% every year. So the target would be to make 7 to 10% every year on your investment. And that's how we measure if an investment is a good investment or a bad investment. If you can beat the market, let's say you find a real estate property where you can get a 12% return on it, that will be good because you can beat the market. Let's say you find a savings account where you're getting 2% return. That would be a quote unquote bad investment because you're getting less than the market average. So you're going to hear this a lot of times whenever you're comparing any investment. Is it able to beat the market? Because you need to be able to either get on par with the market or beat the market. Because a lot of people get into these investments, a lot of these mutual funds, look that term up, mutual funds, index funds, mutual funds. A lot of times they get into them and they're not able to beat the market. So it's best, a lot of times I recommend keep it simple, especially if you really don't want to dive into how to maximize returns and get 50% returns. And you're not looking to do a lot of crazy numbers like that. You just want some consistent gains that you can retire off of. If you want to just get in the market and call it a day, that is the best way to do it. But if you're comparing investments and you're trying to figure out, okay, is this a good investment? You need to figure out, can it beat the market? That's the metric you're going to use. Can it beat the market? And that's usually on average 7 to 10%. So if whatever you're investing in, I don't care what are you buying shoes? Are you buying shoes? Are you buying the marijuana, or whatever you want to do. Can it beat the market? That's the metric you need to stick to. Next is learn how to get rich slow. You are going to get rich, guaranteed. Like if you do this correctly, you are going to get rich. As long as you stick to sticking with the market or sticking with a consistent uh, business that can consistently beat the market, you are going to get rich. But don't get yourself stuck on these scenarios where you're thinking, okay, I need to make 100% returns this year. I need to make 500% returns this year. That's going to get you into issues where you're losing a lot of money, you're getting super aggressive, you're trying to make $1 million in 3 months, and you don't need that. Getting rich is a slow process, investing is a slow process. It's going to take time. Imagine Warren Buffett. He started his investment journey when he was like 11 years old. He's been doing it since he's like 90, 95 now, or something like that. You need to stick to this and understand this is a long game. This is not a get rich quick scheme. This is not oh, I need to pay my bills next month. How can I make an extra $200? Don't think of it that way. Think of this as an education game. You're going to be learning a lot. You're going to be studying. It's going to be a lifelong journey where you're going to take your time. It's going to grow over time. And the beginning is not going to look that big. Your first couple of years, you may not make a lot of money. You may make a little bit of money. You may make a couple $100. It's not going to be that crazy. You're going to look back and be like, I'm not really feeling it. But this is a magical thing called compound interest. If you make 7% the first year, then you make another 7% on top of the 7% you made, and then you repeatedly do that every year, it begins to compound. So it's called they call it one of the ninth wonders of the world, because it's almost magical how the math works. If you take $10,000, add $700 to it, and then add another 700 and 700, it begins to add and compound over time. And it gets to a point where the money that you're putting in isn't even equivalent to the money that you're making off the interest. So take your time. It's going to be a long game. Don't expect to get rich quick. Expect to get rich slow, and then you'll gradually get there. You will get there. Just take your time, take it day by day, and you'll be just fine. All right, so this is probably like the number one thing on this list that you really need to be careful of. And costs are killers. Costs in this investment game are killers. And you need to be very aware of this. In any investment, you need to figure out how much it's going to cost you. And I'm not just talking about just to purchase it. I'm talking about the fees, the taxes. And a lot of people don't pay attention to this. If you have a 401k, let's say you opened up a 401k at your job. Have you ever looked at the fees on your account? Have you ever looked at how much the management cost is taking, how much they're taking out for marketing and advertisements and all this little extra stuff they do with your account, the fees that the managers take and give it to the employees or whatever they do with the extra money? Have you ever taken into account how much that is? A lot of people have not. Most people don't even look at their investment accounts, but you need to look at that. You need to figure out, okay, how much is this actually costing me? Because like we talked about before, how there is compound interest, there's also compound interest on the side of fees. If they're taking out a 2% fee every year, that compounds every year where you might be missing out on hundreds of thousands of dollars. So be aware of that. Check your fees and see if you can compare your fees to other places. If you can get a cheaper fee where they're charging 1% to manage your account, or 0.5%, or they're charging nothing to manage your account, you're going to be in a lot better position than someone that's being charged 5% to manage their account. Just be aware of that. Also be aware of taxes whenever you make any type of investment, because fees and taxes are going to be your two killers in this game. 401k, you're going to be charged at an ordinary income tax. So that might be, if you're in a high tax bracket, that might be 40%. You need to check that. Maybe you can find a better investment that you're not going to be charged 40% on your income. Maybe you can get into real estate, or maybe you can start a business, or you can have some type of LLC that you can set up in a certain way to avoid these taxes. Be aware of that, because those things are going to be your biggest killers. Avoid your taxes, avoid those fees, and it's going to save you a lot of money, literally hundreds of thousands of dollars. So be aware of that. Next is check your job. A lot of people watching this video, you're going to have a job. We have jobs. So a lot of times they're going to have 401ks, IRAs, and different type of benefits, maybe company plans, Maybe you get some free stock on the side for working there. Figure out what your job offers investment wise and take advantage of it. You're working there. You're working there to get a paycheck. You might as well take advantage of all the extra benefits they have on top of that. It's literally free. It's literally free money. So if there's a 401k at your job and they're willing to match 6%, make sure you take the 6%. That's free money. If they have stock options, make sure you opt into the stock options. This is free money that you can use to save. Maybe you want to pull it out after you leave the job or whatever you may want to do. But make sure you're maximizing those benefits, because instead of you putting in an extra 2 grand, allow the company to do that. Makes perfect sense. So check all those things. If you have to talk to your HR department, whatever you may need to do, figure that out. You're going to save a lot of money that way. All right. So I know a lot of y'all are familiar with the Forex scams. This is just a warning. Beware of scams. There's going to be a lot of scams in the game. There's going to be probably people in my comment section down below talking about how Bitcoin can make you a millionaire in 2 weeks. Those are scams. Be aware of that. Make sure you're checking. And this goes back to understanding what you're investing in. Make sure you're avoiding scams. There's people that are trying to scam you that you can make $1 million in a day. A lot of times it's not realistic. So be aware of that. We have the Bernie Madoffs of the world that say, okay, we got you. You're going to make millions. Everybody's going to live in luxury, blah, blah, blah. Make sure you are avoiding scams. I can't stress this enough. A lot of people want to take your money in this game. They want to write it off. They want you to add your signature there. Make sure you're dealing with reputable companies, reputable brokers, reputable people that actually understand how to manage money and figure out what is real and what is not. Just do your research and you should be just fine in this game, but stay away from scams. And this kind of adds to a second point on top of that. You want to continue to educate yourself on this game. This is going to be a never ending process of learning. When I first started off, I took 5 minutes every day when I was in college. I took 5 minutes on one term. I remember watching Money Week videos. If you're familiar with that channel, Money Week is like a UK, is a guy out in the UK that will put terms out every day. And I would sit there and learn the terms. If it was price to earnings ratio, if it was candlestick, if it was EBITDA, or whatever it may be, I would sit there and understand one term every day so I could learn. And that's what it's going to take. It's just going to take some time for you to understand and learn this game and get comfortable with it and figure out, what do you like? What are you familiar with? What do you like to do? What do you like to invest in? Do you like to trade? Do you like to invest for the long term, invest for the short term? Do you like physical investments? Do you like more paper investments? Whatever you like, figure that out through the education process. Take some time, 5 minutes a day. Everybody has 5 minutes during their commute to work. Put on a video during their 5 minutes before they're about to go to bed. Go look up on Google, what is this? What is that? Figure that out. And you're really going to exponentially grow your bank of knowledge over a long period of time. And that takes me to the last point. Once you take the time to really learn and figure out what you like, what you don't like, what is going to work for your schedule, you're going to be figuring out what your strategy is. You're going to have, let's say you have a job, a 9 to 5, but you realize you have a couple of hours during the day to look at investments. You may be the type of person that maybe wants to day trade. Figure out, okay, I can day trade for an hour or two. Or, you're not the type of person that you don't really have any time of day and you just love your career. You don't want to do anything investment really. You might be the person that wants to just buy the market, call it a day. You're going to make a good 7 to 10% a year and you're good with that. But taking the time to educate yourself and then figuring out your strategy is really going to really help you out, and keep it simple. That's really what's going to come down to. Once you figure out what system works for you, keep it simple. Learn to grow that system. If you're learning swing trading, don't learn swing trading, day trading, option trading, Forex trading, and 50 other different investment strategies all at once. Take one, master it, grow it, because this game is going to take a lot of time. There's a lot of different things you can learn. There's 50 million investments out there. There's probably investments I'm sure there's investments I don't even know about. But it's best to focus on a few, get really good, and then get comfortable in this game and learn to grow your money that way. But that's going to wrap it up for this video. If you have any other questions as a beginner, how to get started in this game, Let me know down in the comment section down below. I might do a follow-up video to this. Probably, I'm even thinking about doing one where I'm answering the most frequent questions that people ask about investing. So that's probably going to come next. So put some questions down below so I can have those ready for the next video. And that's going to wrap it up. It's me, your boy. Blessed Applesauce. Stay blessed. I'm going to see y'all next time on Blessed to Invest.
Just to see tomorrow is a blessing. Stay prayed up is the message. Everything about a nigga blessed. Everything about a nigga blessed.